To spotlight some investment strategies for your portfolio, joining me right now, Graham Day, CIO, Innovator ETFs. Thank you for being with us. So, look, surprise, you came and it's a record day. I'm not sure anybody expected to get right back to the records, but here we are. How are you feeling about 2024?
You know, Nicole, great to be here. When we look at what's going on, at least in the ETF world, and it comes to technology, a lot of investors actually missed out on that big 2023, and we've seen a lot of investors now chasing that performance. We've actually had, in many cases, more flows into tech-focused ETFs in 2024 than in all of 2023. So a lot of investors have missed out on this massive rally. They're trying to get exposure, and so we are focused on talking to advisors about how can I maintain this tech exposure, but now is more importantly focused on managing that downside risk.
And sometimes they say the smart money does the work, and then everybody else, then it becomes a crowded trade, to your point, where everybody is piling in even more so in 2024 into tech. So what do you suggest? Because there's still the idea you should have exposure to tech, but be diversified. You have several strategies here. QFLR is one strategy that you'd like to talk about. Tell us about that.
So QFLR, NASDAQ 100, but it's focused on giving investors 70 to 80% of the upside, but with a built-in downside floor against losses. And I think those are the conversations we're having with advisors today. Their clients are saying, I want more exposure to technology, but I don't want to take on all of that downside risk. There can be big up moves like we saw in 2023. There can be big down moves like 2022. And so to be able to give investors that exposure, put in a downside floor of about 10%, that means we're preserving about 90% of your capital every single year. Mm-hmm. That's a play that advisors can take to their clients. Let's stay invested. We can add money to this, and we have this known level of risk management in place.
Nvidia is in there. We saw Apple, Microsoft. I mean, for some of these, Apple and Tesla, for example, when you talk about the Magnificent Seven, have been underperforming some of the other names in the group. But you have Microsoft, Apple, Nvidia, Amazon, Broadcom, Meta, Costco, and more, Google and Tesla. So people will have that opportunity to do that way. Well, now you have another strategy here that you were discussing, and that is IFEB. Tell us about that one.
So IFEB is the MSCI International Developed Markets ETF that has a 15% built-in buffer against downside losses. And so as you mentioned, Nicole, stocks at all-time highs, how do you navigate this? How do you get some of that cash that's been on the sidelines for a long time? How do you get that back into the market? And that's another concern that advisors have, is 30 to 35% of their clients' assets are sitting in cash. You need a strategy to get them off the sidelines. So whether it's QFLR, whether it's international markets, how many advisors are doing that research to say, I want to pick these individual stocks within international markets? Most aren't doing that. IFEB is a way to get broad exposure to international markets, but have that known 15% buffer that's built in against downside losses.
Mm-hmm, mm-hmm. Tell me a little bit about the economy, the environment. You believe that you won't see the Fed cut rates until June at the earliest. Is that right?
Yeah, I think from our perspective, we've seen the market is pricing in the reality that the Fed may not cut as quickly or as often as the street used to think. So most people are expecting 4 cuts. We've seen the 10-year yield rising, which is putting some pressure, we think, long-term on stocks. But the name of the game right now is risk management.
Right, and I'm sorry to interrupt you, but so investor enthusiasm is still towards tech and AI, and this is a way to hedge or protect?
100%. Everyone's focus is on the Mag 7, on AI. Are we at the beginning of a bubble? Are we getting really close to the bubble popping? If you look historically, people that got out before the bubble really took off, they missed out on an enormous amount of gains. And so that's the benefit of something like QFLR, that you can participate if this thing continues to get bigger and bigger. Right. But then when it pops, you want to preserve that wealth. And that's where having that built-in floor against loss gives investors the peace of mind to stay invested, and it's a tool that they can bring to their clients for the first time ever.
What are you finding when it comes to flows? You mentioned that the flows have gone towards tech. Outflows? Have there been some outflows in areas?
So if we look 2023, we'll look at some of the biggest tech-focused ETFs, QQQ, SMH, XLK. Those ETFs had decent flows in 2023, not great. And as I mentioned earlier, a lot of the people missed the rally. 2024, the Q's inflows have almost matched all of 2023 inflows.
Right.
And then if you look at SMH, XLK, 2024 year-to-date flows have already surpassed all of 2023. So the trade is now starting to get maybe a little crowded. And now, again, this is why we're saying, having advisors saying, you know what, maybe I missed out on some of that rally. How do I get in now? What's my strategy? I can't go in unhedged. I need to get some of that exposure, but if there's something that can provide that downside protection, that's my key.
Sure, and look, it's only February, right? And you're already seeing everybody piling in. Thank you so much. It's great to see you, Graham Day. Thank you for being with us, Graham Day, Innovator ETFs.